Well, for those of you who didn't see me around, I'm Judith Mark. For those of you who were here yesterday, of course, you would know who I am. Because of the time constraint, I don't think we're going to be going into very much detail with respect to the presenters this afternoon. But I don't know if most of you would have been introduced previously, except for Kim, were you? Except for Kim. So I'll just give a brief introduction. We have with us on this panel EJ, who is the chairman and CEO of Domos, Semo.
Sancus, they introduced me already.
Sancus, and he was introduced. We have also Jeremy Stephen, who you all met previously. Kentus, who was also introduced previously. And Dr. Kim Maleo, who is with us for the first time. She's an electrical engineer, having completed the electrical engineering degree from MIT in 1982. She has an MS Optics from the Institute of Optics, University of Rochester. And she also has a PhD from the University College London, which she attained in 1987. Dr. Maleo is also a Fulbright Fellow and has served as visiting scientist at MIT on different occasions. So basically, we have a very competent and well-qualified team. I think very capable on presenting on the topic, which is how do we find a balanced solution for the benefit of the Caribbean? And we use the word balance because you all would have heard the different discussions this morning, the challenges we face. It's true that the regulators face. How then do we strike a balance between regulation and at the same time innovation? And I think these and other issues would be discussed this afternoon. So without further ado, I'll now go on to the presenter. Jay, the floor is yours.
Thank you. Can you hear me? Make sure the microphone is there. Before I get into it, I know everyone is hearing that the name of my company and seem to trip everyone up. It's Latin, and it just simply means, loosely translated, it means house of trust. So the whole idea is that if you do business with us and you get any transactions from us, any financial transactions from our products, that you can trust them. You can trust that they've been vetted to the highest degree, and we're not dealing with customers who would put your company at risk. So we would vet our transactions, and the tool that we're building is a tool that goes and looks at each transaction, look for the risk of each transaction. Now that's not the topic for today. But that's the reason why we're talking about why we think that our tool could make lives better, and we're going to go into how we think the regulations could support Fintech, and hopefully Fintech will help with financial inclusion. Why are we here today? The reason we're here is because financial inclusion is a big thing. Everyone's talking about it. The World Bank's talking about it. The G7, the G20, everyone's talking about it. It's an important thing. Now, I think that in our region, financial inclusion means something slightly different than if you were in Africa trying to just get someone to get into the banking system and be able to just open up a basic bank account. And I'll talk more about that, why I think it's important in our region also, but even though our needs are slightly different from the needs of sub-Saharan Africa. And then there's the regulatory side of things, there's the de-risking side of things. There's these international banks who are saying, I don't care what you want to do, I don't care how well it sounds, it may sound all nice and well, but we're not going to take you on as a customer. We're not going to let you bank your funds. And that's happening all over the world. So it's two sides of the same coin. Two sides of the same thing. One side, again, you've got the World Bank and the United Nations and the G7 countries saying, we really need this. We really need to support international migrants around the world who want to send remittances back home. We really want to support women who can't open up a bank account in places like Africa and Asia and India. And we really wanted to push these initiatives. And you've got the Financial Action Task Force on the other side saying, no way, we want to ensure that this money is not being used for terrorist financing and money laundering. So what is de-risking? De-risking is the process of banks basically pulling out of certain markets and products. And like in the Turks and Caicos, we had Western Union just one day and pulled out. I think it was backed by Fidelity. They decided that the Turks and Caicos came in. I think the Bahamas presented too much of a risk, and they just pulled out. They weren't going to offer the services there anymore because they felt it was too high a risk. And like I was saying, you have CIBC, you have Scotiabank, You got RBC, those are basically saying we don't want any money services businesses as clients. And they were even going a bit farther because it was popular in the places like the Turks and Caicos where lawyers would keep client accounts. And those client accounts were actually used in some cases for lending for mortgages. And the banks came and said to the law firms, we want you to close down your client accounts. We don't want you keeping your client accounts at our businesses. So the Financial Action Task Force basically said that the purpose of implementing anti-money laundering and counter-terrorist financing measures is to protect the financial system from abuse. And it says it can only be achieved if the components of a country's AML framework are all operating together. They said countries should identify, assess, and understand their money laundering and terrorist financing risk and should take action. And they said to achieve the objective, the FATF has identified 11 key outcomes. 11. All of these outcomes they expect for a country to implement and push down on businesses. No matter what the size of the businesses are, they know that these businesses are supposed to have each one of these 11 things in place to make sure that they can be monitored properly, they're tracking everything properly. This is a huge expense for small business. I know I have a small business. If I have to put in the type of regulatory oversight to do this, I would go bankrupt. And AML people are very expensive. I mean, particularly if you try to get them from the UK, they don't come cheap. So, but why are they doing this? They're doing this because the world has become a very dangerous place. Very, very dangerous place. On the flip side of things, though, which is not slightly outside of this, the world has also become a trusting place. We're doing a lot of things with Uber. We're doing things with Airbnb. We have people driving us who we don't know. We have people taking care of our kids and stuff that we don't know. We have people staying in our homes that we don't know. But for this de-risking exercise is that the world has become extremely dangerous. And for a long time, we didn't have to worry about that on our side of the world because terrorism and some things took place in the Middle East. And occasionally, maybe in London, you'd hear about a bombing or something. But it never happened on our side of the world. And then all of a sudden, 9/11 happened, and it's now happening on our side of the world. But financial inclusion, according to the World Bank, financial inclusion is a key enabler to reducing poverty and boosting prosperity. And they say the financial inclusion, the delivery of financial service at affordable cost to sections of disadvantaged and low-income segments of society, in contrast to financial exclusion where those services are not available. Again, I think that the world treats financial inclusion slightly different from what we're going through. So I'll give you an example. You guys, if you want to follow me, you can take your wallet out. You can look at your debit and credit cards, and you can think about the things that you can do with them. I know that we can make purchases with them. I'm assuming Trinidad is pretty sophisticated. You can pay at the supermarket and buy groceries and everything with them. You can withdraw cash at ATMs, most basic thing. You can pay bills with them, and a few other things. But these actions that we take for granted are not available in lots of other places in the world, and not to a high degree. And even in our industry, in our region. And we're falling farther and farther behind. Farther and farther behind. So there's an e-commerce divide developing. Now before I let you imagine that, which side and stuff are we on, there is an e-commerce divide. I'm telling you, we're at a disadvantage. Give you an example. Who's seen this before? This basically says, sorry, this video is not available from your location. Put your hand up if you've seen, any one of you guys have seen this. Okay, just keep your hands up because some people don't have their hands up. I want to see something. Who's seen this one from Netflix? So you can't do your video Netflix. Okay, who's seen something like this? Or this? Or this? Can't connect to iTunes, you reach it. Or this is from Amazon. Or something like this. This is another one of the books from Amazon for your Kindle. And YouTube. You remember this one from YouTube? You get that. So basically it's not available in your country. So this is my pet peeve. This is the pet peeve that's been driving me to develop this. I would be considered, and I don't like to say this because my mom is here, she's probably going to put me up, but I would like to think that I'm well-to-do. I've got a baby brother who's I considered still finding himself at about 40. He lives in the United States, I live in the Turks and Caicos. But despite the fact that I'm well-to-do, my Kindle can only download books, it can't do anything else. I'm outside of the Turks and I'm outside of the United States. Because he's inside the United States, he's got access to all sorts of services, all sorts of advanced services. So there is an e-commerce divide developing, and we're on the wrong side of it. We're on the wrong side of it. So now the world is fast moving to a cashless society, but our credit cards are not being accepted because they don't have pins on them anymore, or our credit cards are outside of it. It's an international credit card. If you try to sign up for certain services online, you can't get them online. There is an e-commerce divide developing, and it's hard to solve it because a lot of times, I remember I had an account with Amazon. I had found a way to trick most of the systems. I found that if I had put in my Turks and Caicos address, but put in a valid U.S. code, postal code behind it, it will take it. And I used to go through, so I'm like, woohoo, I can get through all the stuff that I wanted to. But then some of them now started having human beings going through them and started saying, wait a minute, this doesn't work. So when my credit card had expired and I went to renew it, Google disabled all of my accounts for my company and was asking me to verify them. I had to go to the bank. I had to copy the credit card, both sides of the credit card, because they realized that there was something wrong. That's a huge issue for me. When I have customers going on my product and I have to be worrying with Google, trying to convince Google, and it wasn't even in the United States. These were Indians who were working for Google in India telling me that my credit card was invalid. And I'm saying to them, please call Scotiabank inside St. Lucia or whatever to verify it. So that's why we're on the wrong side of it. And it's going to keep going like this until we resolve this issue that we can conduct financial transactions from the Caribbean without being a risk to those institutions that provide the services in North America. So what's the answer? The Fed have asked countries to design their AML policies and assessment related to the individual products, the industries, the channels, the countries. I know that I spent a lot of time in Haiti. I've got a friend from Haiti right there. And particularly with Digicel, I spent a lot of time in the north of Haiti, Port-au-Paix, Labadie, Cap. You'd see all the names that I know. But Haiti is not the Turks and Caicos. It doesn't possess the same risk of the Turks and Caicos. So the policies should be not just for the Caribbean. And I'll go off on a slight tangent and say, I remember when the banks were wasn't giving a lot of loans in the Turks and Caicos. And I raised the issue with them, and I said, how come you guys don't give a lot of loans? And they said, because the risk in the Caribbean of hurricanes and half the year people are out of work, blah, 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 blah. I said, but Turks and Caicos hadn't had a hurricane since the 50s. Now, let me say, for those of you who've gotten hit with a hurricane, we've gotten hit a few times since then. But their point was the Caribbean was a collective. And the risk of one was the same risk that was going to be spread across all of them. That makes no sense. The regulatory framework needs to find the balance between financial integrity on one end and financial inclusion on the other end. And again, I'm going to say financial inclusion for us doesn't mean just opening up a bank account. It means allowing us to enjoy the same quality of life that people from developed countries have. We don't want to watch television and see things happening on television. People can order things on demand and get Amazon to drop it within hours. And then when we try to order, it says, I'm sorry, you're outside of the region. That's our quality of life is the issue that we're looking for. So when people think that financial inclusion means opening up a bank account, for us it's a quality of life issue. So this is not necessarily what the Financial Action Task Force is saying. This is my view now. I feel that the regulation should be innovation, and consumer-friendly, supporting consumer protection issues also, things like being able to support deposit insurance. Functional, designed by type of service or category of product, and it should promote both bank and non-bank models, or carrier and non-carrier models. So I know the question came up about earlier, a statement about carriers getting into the money business. And I'm going to say to you this. Companies, and I'm a shareholder in Digicel Turks and Caicos, we've got the bulk of the customers, and so you're going to have to deal with the carriers. But the margins on money businesses are so thin, it's completely different from the same type of margins you will see in a telecommunications business model. And that's why telecommunications companies aren't going all over it. They want 20, 30, 40% EBITDA margins. And when you're dealing with money businesses, you're dealing with single digits, 2, 3, 4, 5, and they're not going to get into it. I know Safaricom, everyone talks about M-Pesa, but I see M-Pesa as a gift from DFID in the United Kingdom that funded it and made sure it was going well and passed it over to Safaricom. It wasn't something that their R&D created. It establishes, it's open-ended, it's open, and it should level the playing field for e-money services. It should establish a risk-based approach and proportionate regulations. Proportionate means that it should look at the jurisdiction and the type of product and assign the risk to those individual things instead of just saying this is a collective risk for the region overall. And it should encourage and promote the use of simplified KYC, and the regulator should extend itself beyond oversight. They should be trying to promote financial inclusion. Again, I'm going to keep saying this over and over. It is not about opening up a bank account in the Caribbean, and at least most of the Caribbean. It's about a quality of life for us that we want to enjoy compared to our sisters and brothers in the developed world. And it should work with the international banks to support a KYC framework which is conducive to the country's needs. I mean, so you don't have Scotiabank in here saying, well, we're not going to accept what the regulator tell us to do because we're going to be following the rules of Toronto back in Canada. Now, I know that we talked about and it came up, this was supposed to be a surprise. What we did when I faced the problem about KYC, we went out and developed our own KYC tool that we feel, and this gets back to the same thing, we're making lives better. We feel that if we could come up with a way to vet persons at a high level, persons who might not have been in the system at all, you know, persons who come without the bank account, have nothing, they have no reference letters, nobody can write them anything. But one thing that they have is that they have smartphones. And I saw a stat last night that says in 2013, it might have changed, that 2 billion persons didn't have bank accounts. But 1.7 billion of them had phones. And one of the things that they're doing with those phones is that they're leaving their digital fingerprints and footprints all over the internet. And so the idea is that we could collect all of those digital fingerprints and footprints and we can go through it. We can assess you for risk. We can understand your lifestyle. We can understand the things that you're doing. If you're tweeting out things that you happen to be a supporter of Donald Trump, we know what type of person you are. You know, I don't need to say anything else about it because I'm afraid I'm going to get cursed out by Donald Trump. But if you got a gun in your hand and you're talking about shooting people up and all those sort of things, we can know the type of person and the traits that you exhibit. We can look at the things that people are saying about you. People are starting to experiment with this. China calls it just social credit. We can take all those sorts of things and say, we think that this person represents a low risk, or we think this person over here represents a pretty high risk for your business. I mean, if you take the insurance companies, for instance, and you're skydiving and you're speeding on a motorbike and you've got photographs and stuff doing that, we can understand that the risk you present to the insurance company is higher than someone else. So we built it on top of IBM Watson, which is $1 billion cognitive computing technology. For those of you who may not remember Watson, it won on Jeopardy against the 2 all-time Jeopardy champions. We start off with the largest non-governmental database of high-risk individuals and persons in public life. So we've got like over 5 million names. This is the FinCEN list. This is the Interpol list. This is the UK Treasury list, the United Nations sanctions list, all of them. Start off with that, and which allows us to quantify with a high level of confidence that the person that you're dealing with there isn't someone out there looking for them to like an arrest warrant, anything for them. And so we built it on top of this platform that can go through documents that, like I said to you, over through the internet at a speed of 800 million pages per second. And so it can recognize patterns, connections, and insights around persons of, and entities of interest at a global level better than a human being can. Now, I'm going to finish this off with a 3-minute video. This is an IBM video. This is IBM training Watson for cybersecurity. Now, this video is about 95% related to what we're doing. But if you just make the imaginative leap and think instead of cybersecurity, we're talking about human security and crimes, you will understand what it is that we're doing with it and gives you a better view of what Watson can do and by extension what SafetyNet can do.
Relationships. You can correlate and look for the most relevant pieces of information that decisions need to be made about. You take 1 billion security events and you boil it down to 12 specific things that you need to look at. What Watson then brings to the table is the distilled human understanding that's most relevant to making those decisions about that boiled down list of things to look at.
Security analysts are always fighting fires. Wouldn't it be nice if they could be a little proactive? How do you get to be proactive? You read, you learn. What are bad people doing? Oh, well, they're exploiting this vulnerability. What do you have to do to fix that vulnerability? You run this patch, you change this configuration. But Watson's reading the same stuff.
Watson is different from traditional systems in that it's not really programmed so much as taught. You teach it by example, distilling the understanding of human subject matter experts, but they're not doing it in the form of coding. They don't program it. They give it examples. And as they give it examples and give it material to work on, it learns to become an expert like they are.
When you bring a new domain of knowledge to Watson, you have to start with, what are the words? What's important? What's a virus? A virus is bad. What's malware? Well, it's like a virus. It's bad too. What's a worm? Well, it's a virus that moves, and so on.
The process of teaching Watson cybersecurity, as with any other domain, has several elements to it. The collection of the body of knowledge, we call it the corpus, the human annotation, which is capturing subject matter experts' understanding of the field by having them look at snippets of documents and actually annotate the document by hand. Iteratively, you add to the body of knowledge, Watson becomes a subject matter expert. It uses those examples to teach itself so that it can then annotate many thousands or millions of documents of the same basic type that it was given examples for.
Watson doesn't modify its own code. It modifies its knowledge and then leverages that knowledge to find answers you weren't expecting.
It's designed to augment human intelligence. It doesn't replace people. It amplifies a person's ability to be a subject matter expert.
The SOC analyst is in a tough situation right now. You have skyrocketing problems, an explosion of information that you could use, read, perhaps remember, to try to attack those problems. And oh, by the way, you have to do all of that every day. Finally, there's a chance for the SOC analyst, for the security person who's struggling and drowning and giving up and quitting because they can't keep up. There's a chance. We are not going to stop the bad guys. We are not going to stop malware. Now we've got a new lever to keep up with the bad guys and maybe get ahead of them.
So what we do is that we've used that tool to try and turn it into the world's leading expert on compliance, on knowing who people are and understanding the risk that they represent to you. We think that that gives a pretty good balance between putting the regulator at ease, that customers now that you're onboarding aren't doing nefarious things with with the tools, the financial tools that you're giving them. And I'm hoping that not just for our region, but all of the companies around here can now go global, because you can now tell global regulators, we know who our customers are, and we know that the risk that they represent, and we're not doing business with persons who you deem a high risk, and then they don't have to burden you down with all of these regulations and requirements and then drive up your costs and cost you to can't roll out your product. Thank you very much. I hope you enjoyed it.